All right, let's hop into it. So, Colin, if you don't mind, why don't you give the recent headlines in case anybody has not heard it in the last what half hour ish?
Yeah, yeah, and maybe not even that much, right? So if you haven't seen, markets literally, to us's point here, have actually started ripping in the past 15 or 30 minutes, because he just put an effective 90-day pause on all reciprocal tariffs minus China. I'll get into that in just a second. But it's important to know that the reciprocal tariffs are the ones that are being paused, not the 10% across the board tariff. Right. So that stays in place. That stays as is. It goes into effect. The reciprocal tariffs, and I'm sure Wes and I are gonna, and we'd love to hear from you as well. We'll get into it some. It seems like people in his camp or enough business leaders have gotten in his ear to say, "Hey, pump the brakes on this. There might be a better way to go about it." Right. So 10% across the board tariff stays in place. Reciprocal tariffs paused for at least 90 days here. The big caveat, which was China, and I alluded to, he actually increased their tariff, right? So there is now an effective 125% tariff on China. It's hard to kind of get a read on why that number, why just China, et cetera. But I'm sure we can talk about that as the roundtable goes along, right? So that was again within the last 15 or 30 minutes. I believe I just saw a headline right before we got on here that the Dow surged 2,000 points on that news, which is one of the largest rallies in the last 5 years, right? And I think there's a conversation to be had around narrative in this discussion, but that is the breaking tariff news. And we thought it would be important to kind of kick the roundtable off with an update of where things stand.
Right, exactly. And let's open up the mic here if that's okay. David, because you've done a great job the last couple of meetings, like having an open conversation with us. And anybody else who's open to having a conversation about this, please unmute your mic if you're okay with that. Dave, let me throw the mic over to you. What are your thoughts, feelings, what's going on in your own headspace?
Yeah, a couple of things. One is a really good advantage of this is, I think probably, I don't know if it was you guys' advice last week when I was on, but it made sense. I finally got rid of my stock tracking app that comes, default on the home page on the iPhone. And
Yep.
when did I do that? Friday or something? And honestly, I haven't really missed it. I've been a lot more calmer and it's been really good, right? Because you guys have got strategies for us in place that it just doesn't make any sense to watch it. It just doesn't make any sense. So that's been a good thing. The other thing is I have a client who, I do web development. I have a client who had their inventory warehouse in Canada and ships and stuff to Canada. And she just told me this morning to pause or to change the site to not do anything in Canada. They've been removing their inventory from Canada. And so for me, whether or not you agree with the tariffs and because that's a complicated thing, the hard thing for business has been, and we talked about it before, is the speed with which this has been implemented. It's been hard on businesses to pivot. And now it's back to, well, things are paused for 90 days. The problem with all that is that what do you do as a business? Right.
Mhm.
And that makes it tough. That makes it tough.
Yeah,
Um,
David, I completely agree with you. I think one of the things that we don't want to interpret this, me personally, so you guys can try this on for size. Hey, look at what happens. Like the market came back up dramatically. Oh, we told you so. You always build it by the fundamentals. So whether or not the market is air quotes screaming up or downward, that is irrelevant. That is short-term narrative to Colin's point, has nothing to do with the underlying fundamentals of both portfolio creation as well as company operations. And I don't know if you guys saw the investment meeting from Doug McMillon, the CEO of Walmart, but I thought his message was outstanding. He started, from my understanding, by saying, "Hey, as a company, we have weathered many storms. We got through 2008. We got through terrorist attack. We got through the tech bubble, and on and on. We are created to stay on offense, and it's times like this, up or down, any sort of volatility, it's like we're on offense forever and always. If we maintain a defensive posture, we are not growing. We're stagnant and we're waiting for things to hit us. We don't want that. We want to move forward because that's what we need. Just always remember that we always have a downward gravitational force on our money called inflation. And if we play this tariff thing out in perpetuity, what does that mean? If tariff goes up, right, essentially cost of goods goes up. Well, the only way to counterbalance that force is offensively. You do not just wait. You just not let that gravitational pull hit you. You react to it on offense, not defense. Colin, what's your take?
That's such a phenomenal point, right? Because if that is the big fear, and I've heard that expressed from many people, not just clients, right? Anytime you listen to pundits on the radio, on the television, on podcasts, et cetera, right? One of the big fears is inflation. Well, if that's the case, the only answer is to have pricing power as the owner, right? So we can all probably relate to the cost of eggs, or, you insert whatever good that you want to put in here. Eggs is just a fun topical example, right? We can all probably relate to the price of eggs increasing over time. That was done top down, right? So the grocery store owner who used to buy the dozen of eggs for $1 and sell it to you or I for $2, now buys it for $5 and sells it to you and I for $8, right? So as the owner, right, you are ultimately going to push that cost of doing business, that inflation through to the consumer, right? So the only way out of an inflationary environment here would be to own our way out of it. Your dollars, your CDs, your bonds, there is a position for them, there is a purpose for them, right? But they are going to be most susceptible to inflation over a long enough time horizon. Right? So I think that's a fantastic point. And then, yeah, just to reiterate, the message from you said that was the Walmart CEO, Wes. These all of the board of directors of all of these great companies that we're invested in. And again, we're not invested in the stock market. We're invested in businesses, right? And that's it. There's a huge distinction there, right? But all of these businesses that we are shared owners in, they are getting up to, if anything, they're working harder. They're planning longer, right? They're figuring out a way through this. The position will never be, hey, we're going to sit this one out, right? They don't have the choice. Walmart is forced to operate in an environment where tariffs exist, where Biden's the president, where 2008 happens, when the terrorist attack happened. There is no choice to sit on the sidelines. So the only way out of this is through. But that, we don't want this to come across as like we're not understanding the emotion of the swings that happen. We totally understand that, right? But just from a fundamental perspective, the only way that we get through this, right, is by continuing to invest in great companies, right, that figure out the landscape of the day. It just happens to be tariffs right now. It'll be something different, in the future.
Hey, Colin,
Yeah,
let me jump in really quick. So
Yeah.
I just want to illustrate your point. So this company that I just talked about, this lady, she has been listening to the news, watching and working to protect her business. She told me about 2 to 3 months ago, when she was anticipating this could happen, she started protecting herself and moving so that it would not impact her really in a large way. And I think, so you guys talk about the Walmart, I'm talking about this one small company. Good businesses and good business owners are in a position to react fast and move and make right decisions.
Dave, I think it's a very important point, right? Because something that's tough to factor into spreadsheets and that's tough to factor into fundamental analysis is the resilience and the innovation that comes from the human, right? And like these CEOs, these corporate these executive teams, again, from mom and pop shop all the way up to Fortune 500 company, right? There is no off switch that they own, right? All they know is, hey, this is the new rules of the game. These are the new boundaries that we have to play in, and we are going to figure out, we're going to be resourceful, we're going to be resilient, we're going to have to figure out a way through, right? That is, and I'm sure, Dave, you can appreciate, as many others on this call, if you've ever heard somebody say, like, I just invested in this company because I believed in this person or this executive team, right? It didn't have much to do with their fundamental analysis. It was just like, I believe in this particular entrepreneur, right? And it's just because when I was studying them, when I was interacting with them, when I met with them, when I had lunch with them, there was just something. So like, no was not an alternative. No was not an answer, right? They just wouldn't take no for an answer, right? So there is countless stories about that. By the way, if you're a nerd like myself and you like to listen to some of these, some of these conversations around investing, right? You will oftentimes hear people say like, yeah, it was just that person that attracted me to it. And then as I learned more about the business, it became a more safe bet. It became a more sure bet. But yeah, I think it's a really good point that, to your client's credit, you just start to see, hey, the field where the puck is headed. I have to shift and alter my business strategy to be in accordance with what we see coming down the pike.
Yeah, I completely agree. I think another thing to add here, which is really important, is just because the market's come up pretty dramatically today, we don't want to change our tune. It's still a chaotic time. So anybody who's investing with us right now, generally, the recommendation is, okay, let's drip in, because investing is not just pure finance, right? Investing is finance and math plus emotion. So we want to try to make it as stable as possible while building a long-term, durable plan. But if you're about to put in $1 million, right, and you put it in, let's say pre the market increasing today, and you put it in on day one, and then 3 days later you're seeing this drop, that hurts. Like, you have to be really, like, you almost have to be a robot to be able to endure something like that. So if you have an initial sum of capital, what I recommend, and Colin, I don't know if you mirror this, what I recommend is actually dripping in, so we can, yes, capture some upside if there is some, but also protect some of the downside while we drip in and phase this thing out. Because as Trump just said, this is a pause on tariffs, which obviously, in my view, is a good idea. It seems like most people are on the same wavelength of, hey, and Jim, I would love to get your opinion on this. Hey, it's not that it's irrational to have some sort of reciprocation or fair playing field, but most people I talk to are saying, hey, isn't there a better way to go about it, though? Do we have to play bully ball? Do we have to shout about it? I think I saw one of Trump's like tweets or on Truth Social or whatever. It was like, basically calling certain people losers and like sissies. It's like, I don't, like, come on, man. Is this like fifth grade, playground stuff? So Jim, if you're down for taking your mic off of mute, I would love to hear your opinion on this as a business owner. And I know you were pretty vocal last meeting, so if you can figure out how to unmute yourself, that'd be awesome. But let me throw the mic over to Colin first. Colin, what's your take?
At least what it feels like to me today, the news today was people got in his ear in a good way and said, hey, there's a better way to go about this. And we can tone some of this rhetoric down, or at least we can tone the implementation of this down, even if it doesn't come with a dampering of rhetoric. And we can negotiate our way through this in good faith, which is what we're asking for from the other side. Right. So I don't necessarily see a problem with like putting America first and making sure that, everybody can win in a trade relationship. But the style in which it was rolled out and the tone in which it's approached with, it's almost as if he doesn't care, not only about certain other countries and how it impacts them, but at least the top 25 to 50% of Americans too, who do have stake in equity assets, in ownership assets that are being influenced by this, if not for anything else in the short term. So yeah, I largely agree, Wes, that there's probably a better way to roll this out and still accomplish some of the things that you're looking to long-term gain.
Yeah, Jim, let's throw the mic over to you, sir. What are your thoughts and feelings?
Well, long term, that's the way I try to do it. It's what your buddy Dave told me many years ago, and I listened to him. Yeah, long term, think long term. And thinking long term, the whole world is made up of human beings, and these human beings' wants and desires will always be what drives every market. And I don't see that changing very much. It's just a matter of how we're going to go about it. there's going to be some winners and there's going to be some losers in this. Hopefully, we'll be the winners, America, and I'm optimistic that it is going to bring back a lot of the manufacturing to this country. And I really have spent my life always trying to buy America. But it's become very difficult in the last few years. But hopefully some of that will change. But I don't see the market being greatly affected. It shot up just like this because everybody has faith in the human being, and that we're all going to continue to live the way we want. We want electricity, we want computers to work, we want TVs to work, we want food on our table. And it's just a matter of who's going to provide all them things. And I'm sure we'll come out with the right answer.
Yeah, I completely agree, Jim. I think you hit on something that's really great and also dovetails into one of your prior questions, which is like, what does population decrease have to do with market prices in the future and ongoing? Jim, I think you nailed it, and especially as a business owner yourself, what you find is that what drives capitalism is at the core of it is human desire for progress. I heard this great quote of like, happiness is progress. We always want to be moving forward in some sort of way. So therefore, there's a desire. And as every business owner knows, once you create a solution for something, what then happens is another problem, right? As an example, to say that I despise losing is an understatement to the nth degree. I get a physical sensation that is hard for me to bear when I lose at anything. So as an example, my buddy beat me in bowling not too long ago, about 2 years ago. I immediately went out and I purchased a bowling ball. And then I had to purchase bowling shoes. And then I started bowling. I was like, oh, well, how do I get even better? Then I had to purchase bowling ball powder, which I didn't even know, or like oil, all this stuff, all of these other problems, right, sort of illuminated as I solved each solution prior to that, if that makes sense. For those of you who are pickleball fanatics, so I had a recent example where I got beaten pickleball 2 weekends ago, and I cannot stop thinking about it. So yes, I bought the best pickleball paddle. I looked up pickleball lessons, et cetera, et cetera. Go on and on down the list. We could all identify with this in some sort of way. When you solve a problem, there's just another problem at the end stage of the prior solution. That's what makes capitalism work. And if you've ever looked at a communist sort of society, where I have relatives who've come from that area, from areas of communism, where they used to have to stand in bread lines when she lived in Belarus with tickets, and she would have to stand in a line for about an hour and a half just to get one type of bread. So I could go on and on down the list, how the core of capitalism is problem solving because of human desire. Jim, to piggyback off of your point, I think the only way that changes is if human beings don't exist anymore. And if human beings don't exist anymore, we don't really need to worry about money. So all of this stuff I personally see as just short-term volatility because of chaos, and short-term chaos because of, I mean, I hate to be inflammatory about this, but it seems like one person or a handful of people are kind of at the core of this. So it's a decision on policy, not a decision on human beings making decisions that are in the best interest for them and their families to solve current problems. Colin, what's your take?
No, I think you're spot on, right? So to the root of capitalism, I love how Charlie Munger put it, right? That there are I think envy drives this whole thing, right? When you're just saying, hey, yeah, you can strive for better, right? And one framework that we discuss all of the time is there is trade-offs, not solutions, right? So what set of problems would you rather have, right? You're picking that because that unicorn utopia of a problemless world does not exist. Again, if it exists, that means we're all gone. The other thing that I think is it's funny when there's times of like when asset bubbles are created, when cryptocurrencies go into the sky and everything looks like it's doing well. All of the articles written about Warren Buffett and Charlie Munger that they're old and washed up. when there's times of turmoil and downturns like we're experiencing now all of a sudden a whole bunch of really, really solid wisdom resurfaces from the two, right? And one interview that I recently saw circulating again through like the financial networks or the financial modes was both him and Charlie Munger talking about if you're not willing to sit through a 50% downturn, then you shouldn't own it at all. Right. And as chaotic and as painful as the current set of circumstances can be, it is a fraction of the downturn that you should be prepared to face if you are going to be an equity investor. Now, just to be very clear, I am not saying that we are going to go down another 35% or something of that nature. I don't know. Again, in the short term, narratives can really sweep up sentiment and people start buying and or selling off of narrative, right? Not off of, do I think this is a quality piece of ownership to have for, the next 5, 10, 15, 20 years, right? But I think it's good wisdom of, if the greatest investors of all time are saying, hey, you need to be prepared for 50% downturns or don't own it at all, right? It's a good reminder as to the volatility is the price to admission, right? When we are coming off of years where accounts are up 15 and 20 and 25%, the only way that we can get those types of returns are if we're willing to sit through the turbulence. And that's what we're doing right now, right? We're sitting through the turbulence. Again, there's a plan in place for that. But I thought it was such a fresh reminder of the framework that a long-term ownership investor should have if he or she is going to buy equity in real estate or farmland or public companies or private companies, et cetera.
Yeah, I completely agree. And while we were talking about this, I wanted to look up some things because oftentimes I use ChatGPT to do it. So I'll show you the table that I just built, which when the market's dropping, it feels like it's never going to come back up again. Despite the fact that every single time it has. And oftentimes, like somebody said to me recently, it's like, oh, well, if it drops by this, then it has to go back up by X%. So if it drops by 50%, it's got to go up 100% to get there, just because of the way algebra works. It's at the core of productive assets, because that is what we're talking about. We are not talking about speculative assets. We are talking about, as Warren Buffett refers to, productive assets, meaning number one, the assets themselves produce value to society. They are selling goods and services in exchange for money. And in so doing that, they have profit margin. Why? Because it would be impossible for me to make a computer in my lifetime. So therefore, I'm willing to pay Apple, whatever, $1,500 to sell me that computer. They get plenty of margin. I get plenty of time savings margin, and I can focus on serving all of you guys. But from there, a productive asset, even better, ideally, is that productive asset not only produces value to society for margin, it shares that cash flow with you guys and us, right? Via dividends, or if it's a private business, it shares via business distribution. If it's a piece of rental real estate, it shares via the rental income. So just always remember, those fundamentals do not change. And America has specifically created an incentive system to incentivize guys who own their own businesses and girls who own their own businesses, like Stacy and like Dave and like Jim, go on and on down the list. The reason they created their businesses is because the system incentivizes them to do so at a fair profit margin. Stacy, if you don't mind, I would love to get your take on all of this and what it is said, et cetera. And you are on mute, just in case you don't know. Stacy is a newly minted podcaster, so we're going to test her skills real quick.
Yeah. Hey, Wes. First of all, Wes, Shelley, Colin, you're adorable and brilliant. I mean, these are.
I don't know about the brilliant part, but maybe
he
adorable.
is brilliant. These meetings are so valuable for me. I'm just completely new to a lot of these concepts, and have been with you for a lot of years, but just pretty much just trying to learn as fast as I can. It's been really scary. My stomach's been in a knot, trying not to watch the news, trying to trust. So, yeah, I mean, we're in this for the long haul. We're in transition, financially, in terms of, one of our incomes of our family is just now went away, one of the monthly incomes. So we are going to be living off of, sorry, I got 3 phones going on here. We are going to be tapping into our investments, our nest egg, trying to not to get into the core investment. So hopefully we can make it through that, trying to make some changes to our business and our nonprofit to make it more profitable so that we can weather the storm. But I really like what you said, and just really bringing in the point of, especially when I believe Colin just said, we're investing in businesses and not necessarily in the market. So
Yep.
I appreciate that. And as a business owner and having I got this great business advice from Wes Rollins a couple years ago. The only thing better than owning your own business is owning the land on which the business operates. And so we went ahead and moved forward and did that. Even though it stung a little bit financially, we bought the property for cash. So that was a huge chunk out of our retirement or our nest egg. But again, trusting ourselves. And since I am a business owner, I know that I can trust myself to make adjustments and buckle down and really get in better contact with our client base to see how we can retain and create more value there. Since I feel powerful in that realm, I trust, if I know I can do that, I know Walmart can do it and will do it. And so I feel that that's a better way of looking at it as we kind of navigate through this and just try to stay calm and trust the process. Right. I've been learning that a lot too, here and in the business, in the marketplace, at networking events, different things I go to, and also at church, which doesn't hurt. So, I appreciate this information and this kind of comfort, this kind of community. This community, I think, is really important for all of us.
Yeah, without a doubt. And Stacy, I appreciate those insights, because what you're experiencing right now as a small business owner is it's just small business at scale.
Right.
That's all we're investing in. Now, some of you might say, well, hey, I'm 60 years old. I don't have that much time. First of all, that's wrong.
That's
right?
wrong.
You have many decades, but then also think about how much power there is in legacy-based planning. It's not just you that you're probably leading. It's your spouse, it's your kids, it's your future generations. For me, my goal is to change my family tree and help others do the same. That's how I'm thinking. So when I can think in that time perspective, the next 6 months are completely irrelevant, assuming I have proper fundamentals in my portfolio, which I do. And that's what we want and have built for all of you guys. As long as you have that, it is definitely difficult emotionally and mentally. But from a pragmatic standpoint, let these companies do what they were specifically designed to do and what you invested in them to do. Colin, what's your take?
Well, you made a great point, right? But I would say that's also true of the larger companies. All we're doing on a personal level is no different than aligning our time horizons with their investments. Walmart didn't wake up this year and think, well, how are we going to run the company in 2025? The operators, the C-level executives, right, the board of directors have a much longer term time horizon when they're making decisions. Now, sure, do they have to react to things like tariffs that they couldn't have seen coming 5 years ago? Absolutely, right? But what they are baking in today is not how they're going to wake up on April 10th and figure out how to run the company. They have much longer time horizons in mind when they're making bets for the betterment of their company, right? And no different than our time horizons, right? We have beat it to death on this podcast and in personal one-on-one sessions with you guys that our long-term portfolio has a minimum of 5-year time horizon wrapped or baked into it, right? So, number one, if this administration really gives you a bunch of nausea or whatever the painful word would be, they'll be gone in 5 years, right? So that helps, right? But number two, we want to align our invested dollars with the owners and operators of the companies that we're investing in. If they are going to operate on a 5 or a 7 or a 10-year time horizon, right, our dollars should align with their goals and their timelines as well, right? So I think it's a fantastic point, Wes, that when you can get outside of the scope of, well, I need to change my family's trajectory in the next 6 days and extend it to the next 6 years, well, now you're just tipping the scale in your favor, right? Now we are playing on or competing on a time horizon that puts us number one in rarefied air immediately, right? I can promise you, these roundtable calls don't really exist at the competition level, right? So like there isn't a lot of this going on. So thank you guys for participating because this is pretty cool for us. But number two, if it were, right, it would be all centered on how do we react to this today, as opposed to no, this turbulence was baked in, right? And we actually can become opportunistic around it if we remember that those dollars had a long-term time horizon in nature when we parked them there in the first place. So I think it was a fantastic point, Wes, that when you expand the scope of things, you tip the scale in your favor.
Right. And remember, I know I've showed this chart. It's one of my favorite charts in finance. I've showed this chart before, but it's more relevant today than it ever has been. If we look at, I want all of you to think about, for those of you who have not seen this magic trick before, think about, let's say, so the time horizon, let me see. So from January 2003 to December 2022, right? January 2003 to December 2022. All of those trading days, if you missed the top 10 trading days out of those, I don't know, thousands of trading days between January 2003 and 2022, if you missed only 10 of those days, you went on a cruise or whatever happened during each of those days, how much upside would you have given up? So think about in your head, hey, if I just missed 10 days out of the markets for those multiple decades, how much would my account have been down relative to what it could have been? So just think in your head percentage-wise. So, David, if you're willing to play this game, and I know you've probably seen this chart before, what would your gut tell you? And obviously, since I'm asking, you know it's going to be like asymmetrical, but like assuming that just a stranger, you're just thinking about it, it's like, I wonder if I missed the top 10 days out of multiple decades, what would my account would have been worth percentage-wise, up or down? What do you think it would have been?
So if I missed the top 10 days of investing, up or down?
Yep, from January 2003 to end of December 2022.
Oh, I don't know. Maybe it's only double, something like that.
So yeah, so most people here, I'll show you guys. So if you missed the 10 days, which I don't know, Colin, what percentage-wise, that's probably like 0.001% of the days, right? Like if you missed the top 10, your account, instead of being, in this particular case, 64,000, almost 65,000, would have been worth 30,000, half. That is, you would have missed out on 50% of the returns. Here's the other crazy thing. If you look all the way down at the right side of this chart, right? If you missed just the top 60 days, so only 60 days out of that multi-decade period, right? It would have been a 93% difference. That's how profound emotions can be. If you miss just 60 days out of however many thousands, it would have been a 93% difference. And what we want to have on the team here is proper education so that you don't become one of those people that says, yeah, I tried that stock market thing, it didn't work. It's like, no, you didn't work it. If you're using it as a gambling mechanism, as a casino, then yeah, you're not deserving to get the proper returns. But everybody on here is investing in companies, not buying a ticker symbol that jumps up and down. It's really hard to take that on though, because like as David said, when you pull up on your phone, a default app on the home screen is the stock app of Apple, right? The headlines will constantly tell you things, right? If it doesn't bleed, it doesn't lead, sort of a thing. It's always using hyperbolic terminology to get you off of your game. But guess what? At the end of the day, no different than Stacy and David and Jim, and I can go on and on down the list, Jack, et cetera, who own their own companies. They are doing this to drive the value of their business. And this is exactly what the large companies are doing. Those are my final words of wisdom. Colin, what are your final words of wisdom, buddy?
Yeah, and I know it doesn't feel like it now, right? But you guys wouldn't, maybe you would, but it's tough to imagine how many people that we talk to on a week-to-week or month-to-month basis that say, I pulled my money out during COVID, or I pulled my money out during 2008, or I pulled my money out when XYZ president got invested. And In hindsight, they only then realize the mistake, right? So, again, that's not to say we don't understand the emotion and the turmoil of like the carnage that you can feel when it goes from all-time highs down, down 15 or 20%. I get that. But on the back end of this, you will thank your future self will look back and say, thank you for sticking to the plan as opposed to reacting to the headlines, because eventually they'll be just that. The amount of headlines that have come and gone, and I've had phone calls fielded about, well, should we sell or what should we do about this? So on and so forth, that are irrelevant and forgettable today, right? Brexit or whatever, bird flu, right? Like swine flu back in when I was there's so many examples of meaning today in hindsight, meaningless headlines that if you would have acted on, you could have risked losing one of those 10 days or multiple of those 10 trading days that would have made a 50%, 100% difference in your account value today. Right. So believe me, it's not stay the course just to stay the course. It's stay the course because all of the data and all of the behavior points to doing that to keep your family in a solvent position. So I hope that the talk today was helpful or any of this was valuable for you guys.
Right. And I like what was just put in the comments of like, this is why we invest in dividend paying companies.
Yeah.
Right.
Yep.
So that even during volatile times, these companies are still paying out from the reserve accounts and from the revenue accounts, their investors, so that you can buy up more shares, or that's the money you can spend to live off of. Final thing on this, I thought this story was relevant. So my girlfriend Nicole has a son. He's 10 years old, and he's playing more basketball and sports and so on. And we have him in training, and I had to have a conversation with him recently because he was like kind of, he was a little bummed about how his new coach is forcing him to run laps and like doing a lot of cardio and conditioning. And he's like, "Oh, I don't feel good. Like my stomach feels a little off." And it's like I had to tell him, and I heard this quote not too long ago. It was great. It's like, yeah, that's what the work feels like. Right? Like you're just getting used to what the work feels like. So when I show you guys those charts, it's like, yeah, this is what that work feels like. There's a reason that most people bail out ahead of time. They jump ship in the middle of a hurricane because it doesn't feel good. But I could tell you, it doesn't feel as good on the bottom of the ocean either. Like this is what the work feels like. So I give you guys so much credit for furthering your education, coming to these types of things. We want to make sure that we make investing a community sport. So that way you guys feel like you have not only us to talk to, but your peers as well. So anyway, I love you guys. Thank you so much. If you need us in the meantime, just give us a call. And anybody who's offering pickleball lessons, please, I'll give you my number. You can text me. Thank you guys. Talk to you soon. Later.